This conference will now be recorded.
Good morning, gentlemen. This is Frank, Clueless A Trading. We have two great members who are taking these ACS advanced coaching sessions, training sessions for the last couple of weeks. And I think as time goes on, you'll see the benefits as things fall into place. Just like any other profession, it takes a little bit of time to get used to it. But if you have the right tools and are pointed in the right direction, and you have your own skill sets, you will certainly see how it falls into place. Um, I'm basically a living testament to that. On that note, let us begin. Today is the 6th of July, 2019, approximately 10:39 a.m. Eastern Standard Time, Saturday morning. And session will be recorded, uploaded to the Google YouTube channel. Will remain private given the fact that you are paid ACS members, and thank you for that. Um, and are certainly available to you at any given time. And like I said, I'll put them in a batch once we do the first 4 or 5 sessions, and then you can have that saved on your desktop and your computers. Full disclosure, this is purely for financial education, not for any solicitation or advice. And let us begin. So what we're going to do today, as we spoke about last time, is we are going to go through, I'm going to go through some extremely important technicals on a short-term basis and a longer-term basis so you understand what is going on. Everything, all the forecasts and everything that I have talked about the markets are pretty much, hit the targets. But the fact is that markets making new highs doesn't really doesn't mean a hill of beans, because not everything makes a new high, as we all know that. Okay, so a trade management is key, and understanding the different aspects of how these technicals work. And the second thing we're going to do today, which is going to be extremely important, is we are going to spend time over the next hour and change to go through batches of stocks that we trade. Um, and so you both can understand the dynamics of the difference between trading a Netflix and trading a United Health, or trading a Boeing at certain times, or trading a Chipotle. So we're going to try to cover, we will obviously won't have all the time, we'll follow up with the next session, but we're going to cover different sectors and how stocks have different characteristics which affect the options the same way. Fair enough?
Yes.
Okay. Anytime that anything that I'm saying needs some explanation, feel free to stop me. I'll be more than happy to explain that to you as we move along. But try to save the questions for a bit later. But as I move along, please stop me at any given time. Okay. So let us start. So first of all, we all know the usual story. Markets hit new highs. They have a little bit more room to go, maybe a lot more room to go. I don't know. I mean, I've shown to the best of my knowledge, based on my charts, what the max move could be on the market, which would be around 3,015, 3,020, which should give us another 200 to 250 points on the Dow. So all that kind of stuff. But along the way, this is what happens. Along the way, we see um, maximum volatility. Nothing is a straight line. I have always said that for a long time, and I keep on reminding people and showing people through my charts that the market is not a cakewalk. It doesn't matter whether you're making new highs and whatever the case may be. As I said before, not every stock makes a new high. And we all know that. And during the time that it's moving along, and this is obviously a 15-minute chart, this is the month of July, and this is what happened since July 1st, which was Monday. So this was this week, actually. So if you look at it, there's been extreme volatility, including Friday, and but everything falls into a pattern. So I considered this chart that you're seeing in front of you, Mike and Serge, to be a classic example, a absolutely perfect example of pure technical analysis. And the way overall that I navigated this each one of these drops and each one of these rallies is based on my constant engagement with technical analysis. Because without technical analysis, there's no way in the world, anyone, I don't care how smart they are, without technical analysis, they could not have in any way or form called these bottoms, including Fridays. Okay, Friday, from a standpoint of a novice trader who's looking at the screens, the market opened down lower. Jobs data was very strong. I'll explain all the economic stuff on the Sunday on the Sunday webinar, which happens at 8:30 p.m. as you know. But in simple terms, it was a very strong jobs number, so that the market freaked out a little bit, and the market is nothing but a spoiled baby. That's really what it is. It always wants what it wants, and if it doesn't get it, it throws a tantrum, and then it goes along its way. Okay, so the mini tantrum that we got on the Friday 200 plus point drop, at one point it was just just straight line down, flash crashes. And if you notice, I didn't go out there and short, because my feeling was that given what I'm seeing overall, I expected, and of course this is one chart, I look at many other different indicators, that my feeling was that they would bounce this market off certain levels. And the levels were so perfect that it was just fantastic. I mean, this is truly one of the best technical trading charts that I have constructed in a long time on a short-term basis. Meaning just 1 week. And this is, of course, Friday. So without technical know-how and structuring the charts, there is no way in the world somebody could have called this move up. I mean, we almost went positive. So that is, this itself is proof that you have to incorporate these tactical charts and technical analysis in your game. Doesn't matter what you're trading. So saying all that, let's get into this here. And I'm going to go ahead and ask a couple of quick questions, because one of the things I want to do with you fine gentlemen, and I really enjoy having these sessions with you guys, is, and I hope we continue on this learning process, is I'm going to ask you a couple of quick questions so I know what you're understanding, so then I can go ahead and explain more. Because me just explaining things and not knowing what somebody else is understanding is basically a waste of time. I'm sure you both agree with me on that, right?
Yes.
Mike, are you still there?
Yes, Frank.
Okay, that sounds good. Okay, so first of all, I'm going to ask Mike. So when you look at this here, when you look at this is July. This is the month of July. Started July 1st. July 1st. Okay. This obviously takes into account, this being a futures chart. This takes into account, this is obviously midnight, and then 6 in the morning. The market started around 9:30 here. It started off with a nice flash crash, no question about it. So saying all that, the first thing when you're looking at this section here, and of course these patterns didn't just develop automatically. They took a full, this was the second, this was the third, the fourth was a holiday. So this was a holiday period. So this period was the this was just the Globex markets, okay? And then and this was the fifth, Friday. All right. So obviously these patterns started to develop, and of course I was looking behind from the past couple of weeks too, but looking at this here, these patterns didn't develop till the following day and then the day after and such, correct? So this was a holiday. So you understand that part. Like, we didn't get these type of patterns developing within the first 5 minutes. It took about a day or so. So Mike, first quick question, and straightforward technical pattern question. So when you look at this pattern here, what is this pattern?
That is a W pattern.
Correct. So that is a W pattern, also known as
Inverse head and shoulders.
Okay, so the W pattern is created. No, the W pattern, yes, you're right. So I'm good. Before I tell you what the W pattern is, also known as what? Dragon bullish.
Dragon, yeah.
Yeah, it's the dragon bullish. So I'm gonna put dragon But you actually answered the question in a far more advanced manner because the W patterns are created through various technical dragon bullish. So the W pattern is a very powerful pattern, very powerful, and especially when it over a short-term basis, or when it develops over a 24-hour basis, it obviously carries more weight. When a W pattern develops over a 1-week basis, that carries more weight. The longer, remember, the longer it takes for a large pattern to develop, the more powerful that move is going to be. I want you both to understand that. There's an old saying in the business saying the longer the base, the bigger the move. In other words, a stock is trading sideways for a year, within a range, and then it breaks out, then the breakout is going to be more substantial than if it's just trading for 2 months and then breaking out. You understand what I'm saying? And the law of physics says that as you are moving in between a range, you are gathering kinetic energy, right? You're picking up energy, and that energy catapults the stock a lot higher. So the longer the time frame, if this is 1 week and 1 day, if this is 1 week and this is 1 month, then if it breaks out over a month or multiple months, it's going to be stronger. So in this particular case, it's a short-term chart. It took a full day or so for it to develop, and it's a dragon bullish. Now, in between the dragon bullish, as Mike correctly pointed out, there were multiple inverse head and shoulders with heads, left shoulders, right shoulder, right shoulder, left shoulder, right shoulder. So there were multiple head and shoulders, and then this was the neckline, correct? You see that neckline? Serge,
Yes.
Mike, very, very important, because as time goes on, as we keep on doing these, you're going to be looking at a chart, and I can almost guarantee you that both of you will be able to detect the pattern before I even draw it. Believe me. And you will see the magic of how these machines hit those exact lines, which you see almost every day when I put these charts, and then they bounce off those lines. So what it does for you both, and what it helps me to do to help all my members so that we don't panic, we know those are the levels we want to enter certain stocks, whether or not it be the SPY or some other stocks that move with the market. So
Could you show me the neckline?
1 second. Here's your head and shoulder, large head and shoulder. This is your first neckline. This is your major neckline.
Okay.
And what was your question, sir? You just asked me if I could show you the neckline. Is that what you said?
Yes, exactly.
Okay, sounds good. So see how methodical and mechanical these machines are. Because remember, these algorithmic high frequency trading machines, they're basically code, right? So the guys who are writing the code, they are looking to see a probability move in the form of percentage moves, mathematical numbers. It doesn't matter what event it is. So if there's a China trade talk fight, whether it's this, so they'll say, okay, the market's going to move 0.5% or 0.4%, and that's why each of the supply, which means the sell zones, and the demand zones, which are the buys, are so precise. Now the key is to identify them, and that's what I'm trying to teach all of you. And so that's the key. So they have a certain percentage move or range move that the market will move in, regardless of what the news is. If it's good news, they will run it up a certain percentage point. It'll show up in visuals on our charts. That's why you have the supply points and demand points, and that's what creates the pattern. Did both of you understand what I just said?
Yes.
Mike, you're with us so far?
I'm not sure what you
Okay.
just said.
Okay. The guys, the machines which run the algo HFT machines, right? It's basically code. The guys who are writing, they're coders, right? Mike, you have to say yes or no if you're hearing me.
Yes.
Okay. So those guys are programmers. They're writing computer code. Algorithmic high frequency trading computers are not run by you and me doing buy and sell. They're automatically being done because there's a code written into it. You're with me so far?
Yes.
Okay. So when they write the code and then they write like, okay, here is where we're gonna set a sell program going in, depending on what the event news is, whether it be a bad news from China, whether it be something that happened here, whether it be a earnings warning, their code is set to move in a certain percentage point up and down. The way they write the code, they move it a certain percentage point up and down. Hypothetically speaking, let's say 1%, 2%, which are big moves in the market. Do you understand so far what I just said?
Yes.
Right. So the reason, so it doesn't matter what the event is, they have a predetermined level of movement that's already coded into the high frequency trading computers. In other words, the reaction to that, any type of good or bad news is already programmed within this high frequency trading computers. Did you understand what I said?
Yes.
Okay. And you don't have, anyway, I'm just giving you the background of why things happen, so you understand the bigger picture. You don't have to like know the percentage moves or anything like that. I'm just telling you why this happens. Okay. Now, so first question you answered correctly. This is a large with small inverse head and shoulders within the thing. Now, second question, Mike. So the first large pattern has been identified. What is the other things that you should be looking at within this picture?
Bull flags, cup and handle.
Okay, you're answering everything correctly. First thing I'd be looking at, this is a cup, this is a handle. The handle is always a bull flag, or that's where the selling comes in. This is when things get a little bit dicey because the selling starts to come in. We don't know whether or not it's going to break below the bull flag, and that's why we look at internal indicators, which are not being shown on this chart because this chart has been specifically designed to just look at the patterns on the outside. So at that point, I determine, looking at my quad platform, which reminds me, I will make a note to myself to send you both the link. Call these guys on Monday, get the free trial thing, and then I'll walk you guys how to set up your quad charts. Give it a run. If it really helps you, keep it. And if it doesn't help, then of course you have the free trial. It doesn't come from me. It comes from Quad. Okay, Serge, Mike. So I'll send you the link. You'll just have to quickly give them a call, and they send you all the details with the trial code that you can use. All right.
Yes.
Okay.
Yeah, because that is one of the most fundamental reasons why I can call the shots on the market based on those slow stochastics and stuff, which just work beautifully. And it doesn't hurt to have it in your toolbox. All right, so you got the cup and handle, here. And then this is obviously a bull flag. And the bull flag is measured by this move, which was a large move. Started off around a little bit before noontime. There's your bull flag. Then the move higher, and this breakout, by the way, happened. This breakout happened at 3:45 in the morning. So this was all happening in the pre-market. Got it? Look at the time below.
Yes.
Exactly. So this was the third. So this is where it happened, and then another bull flag, and then a monster move higher. So so that has been identified. So you answered it correctly. You're seeing what I'm seeing. Now, this part here, question for you, Serge. This part here is what? Oh,
Cup and dull.
I'm sorry, what? What is this?
A cup and dull.
Where are you seeing a cup and a handle? This is, the cup doesn't look like this. A cup looks like this, and that's a handle. That's a cup and handle. What is this?
I'm not sure.
It's a double top.
Okay.
Okay, so it's a double top. Both, and it's very exactly like at that 3004 level. Now remember, these are futures, is not always during the market. So this is a double top, where the market found massive resistance. Now, I did say we would go little past 3,000. I had 3,002 to 3,006 as my target, and it looks like that's pretty much what it hit short term. So this is a double top. A double top looks like this, just like the way you're seeing here, sir. It's also, what pattern is it? I'm drawing the pattern out for you. What is this pattern? It's basically a double top head and shoulder. Okay. So
Okay.
yeah, so it's looking like this. A head and shoulder normally looks like this with a neckline, just the opposite of a, sorry. So this is your inverse head and shoulder. A head and shoulder basically looks like this, a double top type of head and shoulder. Okay. So it's exactly what happened here. Now, so this is a double top head and shoulder. There was your neckline. I had arrows drawn here. There was your neckline. I had pinpointed levels we would fall to depending on how fast the markets move. Always remember that when you get these type of drops where the market is down 80, all of a sudden it's down 150 and everything looks like it's going to hell in a handbasket, like this is a big sell program. This is a big stop, like a stop loss that's triggered. You understand that part, both of you? Somebody, it's not you
Yes.
and me, it's some big institutions, maybe have 100,000 shares of Netflix. And Netflix is a classic example. I mean, that stock was down at one point like 9 points. Well, the rest of the market was too. Came back strong. And so this sell program goes off. Big move down. Takes down the rest of the stop losses for the smaller traders who have their trades, and they just like, boom, they take it out. Then they take them out again. So this was happening quite rapidly. I started to worry that we might have to basically as this was falling. Let me ask you both this question. As this was falling, if it continued, where would you think would be the next level of support?
At the uptrend channel, uptrend line.
Well, here you're saying, correct?
Yeah. Yes.
That's correct. And if that broke, what would be the next level of support?
29.55.
That's right, pretty much here. Along the way, it would stop, and the rest stops here, things like that. But generally speaking, at that point, there would be so much selling that that 29.50 at 29.55 would be a great buying opportunity. But that didn't happen. So what I had done is I had drawn this trend line, but it didn't quite get there. Now, where exactly? And any of you can answer. And this is the magic of technical analysis. This was your first neckline. So I'm going to put N1, right? N1. This was N2. Neckline 2. It did try to stop here and went back and forth till it broke below that. So it stopped exactly as I just showed you at the neckline breakout that happened on the 2nd of July. And it immediately started to turn. It immediately started to turn right there. And that was exactly that neckline that we broke out of at 3:45 p.m. on the 2nd of July. Do you both see that?
Yes.
Yes.
Okay. Because it is so picture perfect, not necessarily my chart, but the way I've drawn it, but what the markets did, it told me this market has got juice. Okay. And so when it turned, and this I've explained to you guys both. So it tested this neckline and then turned. This is a 15-minute candle, each of them. At that point, as we move along into Monday, let me make this bigger. You both, you understand what morphing means, right? Like morphing into something or transforming into something. Serge, you understand that word, right?
Yes.
Okay, and Mike obviously knows. So what is this? Once this turned, there was a huge short covering program. I have told you both that these short covering programs, the confirmation really comes after the second or third candle. After the second or third candle, because the first program can automatically also come down and create a double bottom or slip lower to test that trend line, which it never tested. You're with me so far, both of you?
Yes. Yes.
Yes.
Sounds good. So bottom line is, after the second line, that's when I started saying buy this, buy that, and because the first one is great, but the first one is not a high confidence candle. The second one is a high confidence candle. On the third one, there's always a profit taking mode. Now, it also happens to be the other neckline where the profit takers came in a little bit. 1 second. Right there. See that?
Yes.
Right there. So right there, let me zoom in. Right there when it hit. So as I'm trading, what I generally do is if I'm lumped into a bunch of them right in this zone, the minute it's hitting this second major neckline, which was also a level of support, that's why I have a red line next to it. Do you both see that?
Yes.
Yes.
That red line was there before the bounce. I had put that earlier on in the day, if you look at my charts, because I said that would be a level of support. And if we broke that, we would basically slip lower. And that's pretty much what had happened. So what if you are, let's say, if you saw this thing and I put out a chart and you bought a couple of SPY calls, then you need to be aware that as you are getting close to this line here, I generally basically will sell the first batch that I bought after the second candle expansion, because I know when the third candle hits and it hits this big neckline too, which is a major support, resistance. Remember, support becomes resistance. Support becomes resistance depending on which way you're moving. You both understand that part, right?
Yes.
Mike,
Yes.
you with me
Yes.
so far? Yeah. So if this is support and it broke support, all of a sudden as you're moving forward, that's becoming a resistance, a wall. So I know that the machines are going, and this happens almost 100% of the time. I know that at least for 15 minutes or so, they will do some selling. That's exactly. So I generally tend to go out after the second candle, somewhere around this level, and I miss out on the last small part, which is fine with me, because right when they come in here and start selling, I don't know if that selling is going to come down this way or whether or not it is going to reverse hard. Well, guess what? That selling actually came down pretty hard. Look, it overshot and came straight down here. See that tail? Hold on. Do you guys see this tail?
Yes.
So
Ye-
what's the number
Yes.
on the right hand side? Please tell me.
Right. 29 7
7.
77.
Okay. And this was the overshoot. What's that number, sir?
29.82.
Correct. So we lost roughly about 35 Dow points within 15 minutes from here to here, 35 to 40. Boom. If you have a SPY call and you didn't get in here, you got in here, all of a sudden, you're no longer profitable. You are basically flat to slightly down, and you don't know what the hell to do at that point. and of course, depending on how fast the markets are moving as it's turning, you want to add to it. That's a given. But what I'm saying is, I generally would be a seller in this point. Now, second point, going, and this is where the big picture comes in. As all this happened since 2 o'clock in the morning on the 5th, there was obviously sell program all the way till 4 in the morning, all kinds of stuff. Futures were down. This whole move on Friday is now, one person at a time, morphing or transforming into what pattern? This is Friday.
Inverse head and shoulder.
A big one. A big one. Mike, do you see it? Of course, Mike
Yes.
actually knows inverse and shoulders as well. So this is what it's morphing into at this point. And technically speaking, it should go back and hit the highs again and complete that pattern. Whether or not it breaks out to new highs, we don't know yet. But we do know that we have a fair shot of completing this pattern. And of course, if we have positions which are running with the market, not the biotech type of things which we sit on for a couple of weeks and this and that, and some of them just go berserk. Some of them kind of annoy us during the day, but then they work. We're going to look at some of those charts today. So you want to basically at that point maintain, control your position a little bit. So the key is that looking at the bigger picture, you both have seen the same patterns that I have seen. And let me just put this in gear. 1 second. Perfect. There we go. Okay. So at this point, the reason I drew this line, these two parallel lines, is because, as I've always said, not every single time are you going to get an exact left shoulder and a right shoulder. You get this slanted type of thing. You understand what I'm saying? Where one is slightly lower than the other.
Yeah.
So,
Yes.
so my guess is that this right shoulder, give or take a few points, should hold, and then they try to take out this neckline, which is in that 29.97, 29.98 level, whatever. You don't have to be exact. This is your neckline, and if they take out that neckline, then they will basically create a very sharp move higher towards those highs. So so this is the reality of what is going on. So this is a picture perfect technical chart, because in one chart we can see a lot of patterns: double tops, cup and handles, inverse head and shoulders, bull flags. I can even draw a wedge, but I don't want to do that right now. So the
There
lots
is
of I'm
there's
sorry.
a ascending triangle.
There is an ascending this one, oh sorry, this is a rising wedge. Okay, this is a rising
Okay.
wedge, which you're right, if the rising wedge continued higher, then that's an ascending triangle, because that's what it looks like. That ascending triangle became a descending triangle in its own way, if you draw that like that there. Okay. This is actually, I don't want to get into it right now. This is known as a Gartley pattern. That's some hardcore stuff. Okay. And generally speaking, it's a bullish pattern, the Gartley. So this is, oh, I forgot to mention, this is your rising wedge. This is your downtrend channel, right? This is your downtrend channel. And obviously we fell out of it. We also, in this chart, we are also looking at very defined ranges. So let's look at do a quick range calculation. This number is what? 29 what? Support 29 what? 29.56, okay? Just rounding off the numbers. This is a very large range. Upper end of the range is 29.82. So that's 17 points, correct?
Yes.
Okay, so let's add 2982. 82 plus 17 is 99, correct? So basically this range breakout, 82 plus 17 is 99. So basically we are
Exactly.
looking again to retest that 3000 level if you measure the range breakout and where it can go. And overshoot basically takes you to 3004. So bottom line is you are seeing ranges, you're seeing the different patterns, and this is a good learning technical analysis learning tool because of the way things happen just in the past week alone. Highly technical moves that are happening within the market very quickly. They're happening very quickly, and I suspect that will be the case as we move towards mid-July. Just hold on with me for one quick second. Okay, I'm back. Now, let's move on from this chart. You both understand pretty much all the stuff I tried to explain. Now, let's take a look at this one. This is your 15-minute. This is the Gann chart. It goes back a while. It goes back to the month of, it goes back to the end of June. Hold on one second. I put the MACD indicator at the bottom. Let's scroll back. Let's scroll back and look at, this is where I had started drawing the chart all the way here. Okay, so if you look at this one, this goes back all the way to 18th of June, where we hit the bottom at 28.90, which is a long way off. So what we are starting to see, just keep this in mind, if you look at this picture here, lots of new all-time highs, 1, 2, 3, 4, 1, 2, 3, 4. I want you to quickly see, now I'm going to zoom in, okay? So basically, in my opinion, we are in a topping process at this point. All right. So the market is basically starting to top on a short-term basis. In other words, we would be looking at doing some nice short trades on the indices once we complete either this head and shoulder or an overshoot, which I think might happen, which would be overshoot, meaning when it just breaks out, you know, the shorts get another big fat squeeze, 310, 315, possibly the this is the Gann fans 30, 20. Do you understand what I'm saying? So
Yes.
when I look at this chart, it is kind of telling me that and it's a lot of volatility, guys. It's a lot of volatility. You know, it's just nothing we can run away from it. Like back and forth, back and forth, back and forth, 15-minute charts. If we break out, we're going to hit this zone here. If we fail, well, if we break out and fall, then these each of these new all-time highs, in my opinion, will get retested within the coming week or so, up and down. Just keep that in mind. This one is 29. This is 2970. This one is 2981, whatever the case may be. So this chart is another representation. I think the other one's better because it's easier to see. Now, this is your daily chart, and I'm going to start off from the bottom. The daily chart is starting to curl down. That's the first sign that the market is starting to lose some momentum right there. It is still strong. It's over 80, which is a good sign. Remember, this is the stochastic, the same thing as relative strength index, but a more effective derivative of the relative strength index. It is starting to curl down. Curling down doesn't mean it's the end of the world. because we saw the same curl down on June 24th, 25th, and 26th before the market started ramping up again. So looking at this picture here, Mike, first, from a stochastic standpoint, where would you draw a support line? It's pretty obvious. It's looking at you.
Support line at 57.8.
Yeah, somewhere around there. You're right. Let's call it 60. Okay. So at that point, the market could very well have a 2-3 day rundown. But if it doesn't break it and moves higher, then this type of thing will happen again, which has happened many times. All right. Because the uptrend is very strong. And I'll tell you why. Remember, this was a downtrend move. This is an uptrend move in the market. So 1 or 2 days of weakness, and if it falls in that 60 range and then starts to turn, remember, I was pretty scared whether I was going to break this, but it didn't. It turned and went. Great. So bottom line is that this one can be charted the same way. You draw a quick. By the way, Mike, quick question. Did you use another email to sign on with investing.com, or you haven't had a chance to do that?
Yes, I finally used my other email and was successful.
Awesome. I'm not going to charge you for that. I thought to myself, that would be the easiest way to do it. Just use another email. I'm very happy to hear that. And I'm going to help you set up some great charts and stuff. And you too, Serge, on our next session or even before that. Okay?
Thank you.
Absolutely. You can actually, replicate these charts quite easily. All right, great. So that would be the case. Now, the uptrend is still very strong. And you look at the underlying strength in the market by looking at the MACD, another major momentum indicator. If you look at this MACD, which I've enlarged, you can see it is still what we call gaping mouth higher. See that? Look at this. Exactly. It hasn't started to weaken. When the MACD starts to weaken, it doesn't mean the market's going to crash and burn. The MACD basically all started to weaken around this period back in March and April. Kind of moved sideways to weakening, but the market kept on going up for another 2 months. So the MACD it's not like it's eventually telling you we're going to get a big drop, but let's look at the market with the MACD in the picture. Hold on. I'm going to remove some of these lines here. Okay. So if you notice, and this is very important with stocks too, because I use MACD on stocks quite often to see whether the movement higher, if the pressure is starting to ease. So generally speaking, when the MACD crosses down, it takes about 1 to 2 days before the market is going to fall. This was a 3-day, 4-day move down. And the MACD signaled that was going to happen 2 days before it happened. So when the MACD crosses down, what I do from a trade management position, I reduce my trading size substantially. I don't go super bullish. I basically don't go super bearish unless I see some chances to short the SPY through puts. But I basically say, okay, I'm either going to lower my position or not have a position in certain things. Remember, as a professional trader, I'm going to talk about this in following sessions. I am always invested. I always have some position in the market. When things get tricky with the market, my swing positions, I will take care of them like a baby. But the fast moving positions like the Netflixes and the Apples and this and that, I will get out of them or sit on the sidelines with that or buy a SPY put here and there, a couple of SPY puts. But I am always in some way or form invested in the markets because the biggest money is made in the markets when the average person out there least expects it. Like right now, markets are excuse me, making new highs, but majority of people are not feeling like new highs, which is a good sign. And not just majority of people, majority of Wall Street is not feeling like, oh my God, it's a new high. There's no real happiness around, which is fine. That means that's a function of everything else that happened, and a function that the large money, the big money, has not yet come into the stock market. Can you believe that? So a lot of these movements are happening with fast hedge fund money and also company stock buybacks, as I explained in my previous webinars. All right. So that's really what's going on. So let's talk about MACD. So the MACD crosses down, start getting careful. Now, just because the MACD crossed down, here it crossed down, it kept on going down. You see this? Right?
Yes.
Now, this is why the market fools everybody, including guys like me who are like deep into the charts and stuff. So the MACD is crossing down. Technically, it's telling you, okay, we're gonna go down till we start to basically. This is obviously the stochastics on the MACD. It comes down like this. The underlying area or histograms at this point are extremely oversold. See this? What is extreme oversold on MACDs? Generally speaking, let me show it to you, people. Generally speaking, I just draw a line where it becomes really seriously oversold. I do this all the time. One. The next one is there. Make this a little bit thinner. Perfect. So the first number is what? Minus 13, minus 20. The MACD is an extremely powerful indicator for stocks and for the markets. Now, the underlying histogram, in this case, I just put it as area, like the shaded areas, whatever. If it hits minus 20, that means things are really, really oversold. Really, really oversold. So here, the MACD hit minus 13. You see that? Now, you don't have to look at the numbers necessarily. You can simply look at just the visual. Like I said, I'm a visual trader. So 1 second, let me try to get this line out. Okay, so the bottom line is that's fine. So here, the MACD kept on going down, but look what happened. It kept on going down, but there was a huge rally, which was a huge breakout rally that occurred, hundreds of points on the market. Lots of stocks like making big moves. 3 days in a row, the MACD still started to go down. You understand what I'm saying? So right there, see that?
Yes.
So what's the trick here? I want you both to think and give me the answer, and then of course I'll help you with the answer. So how did I kind of figure out? There's a lot of things happening. It retested the 34-day moving average, all kinds of stuff. My other indicators were very deep oversold. What is about this MACD here that told us that despite these lines coming down, because the MACD does a crossover higher, always happens a whole bunch of days later. I showed that to you in other webinars. Remember? You get that big bounce, MACD is still pointing down, takes 4 or 5 days for this to basically start to move higher. So what was the signal here, aside from the falling wedge and all that stuff? What was the internal signal that told us that, you know what, we're going to have a pretty substantial bounce? Even though these lines were crossing down. I just gave you the answer 2 minutes ago. So I want you to think what I just said 5 minutes ago and give me the answer.
The
The histogram reach bottom.
Yes,
Oversold.
exactly. The histogram hit deep oversold and then started to turn. That was your signal. All you need to know. So the MACD can keep on going down, and the MACD didn't cross. MACD actually kept on going down, and the market just kept on climbing. The market kept on climbing. So the MACD was showing a negative divergence for the whole 2 months. Now, this is something really important for you to keep in mind. The MACD was going down while the market kept on climbing. But at one point, it just broke. And that's when we had the huge correction in the month of May. Got it? And it
Yes.
just broke very suddenly. What I'm trying to say, technical analysis is not perfect. So even though the stochastic lines were moving down and the markets were going higher, that's known as what? When the internal here are going down, but the market's going higher. What is this called? And this happened over 2 months, mind you. So if somebody was short, they were dying. And that's why the short squeeze kept on happening. So what is this called?
Negative divergence.
Thank you very much, sir. Negative divergence, right. And in the meantime, this one, I give a lot of weighting. This brings me to my other point. Different technical indicators have different weightings at different times of the market. Now, that's something over time you both will understand. I'll try to show you some of them, teach you. Like at certain points, you have to give certain indicators more weighting because they're carrying more weight, as in determining what will happen, than other indicators. Did you both understand what I just said?
Yes.
Yes.
Exactly. So that's something more subjective and than quantitative. It's more qualitative. It's like art, like, you do this more and more, and and then you say, okay, I'm going to give more prominence or importance, and that's my job. That's why I put up the charts and stuff and all this and with my comments. But it's then you say, you know what, I'm going to give more weighting to the full stochastic, or I'm going to give more weighting or importance to the McClellan oscillator, which normally is during extreme circumstances, the McClellan oscillator. Or I'm going to give more weighting to the MACD depending on the circumstance of the market. Now that will come over time as you both keep on learning. So that's it. So it took a couple of months and then boom, and then the MACD broke. If the MACD breaks like this, get the hell out of town. All right, and either sit on the sidelines. If the MACD breaks like this, that means on a swing basis. Remember, this is a daily chart we're talking about. Yes, you're going to get 3-day bounces, but the MACD keeps on going down like this, they're going to sell that bounce. And that's exactly what they did within this downtrend channel. So this is another great indicator of where the MACD broke, and we had 3-4-day big short covering rallies, all fake breakouts, hit the upper channel, and then started breaking again. So if the MACD keeps on breaking down like this, generally remain biased on the short side. Now, as the market was falling here in the latter part of May 23rd and all that stuff, the MACD started rising. See? It created a positive divergence. That positive divergence told you the market was going to have a ferocious bounce. And at the same time, as this positive divergence was happening, in the latter part, you started to see that deep turn. And this is where the MACD got really, really oversold. At least the stochastics did. And this is what's going on right now. Now, let's talk about what is happening right now. That's what's most important to us. It never matters. It matters what happened before. We learn from our lessons, but what's happening in front of us. So given now you have a good understanding of the MACD histogram and the stochastic lines, look at this. This is very powerful. This is very powerful. It is also powerful that we are cruising above the zero line, staying in positive territory. I didn't know in investing.com how to shade the negative territory red. You know what I'm saying? Like this should be red, right? So you both understand that. So we're in the green zone above zero. It is starting to lose some steam. You can see that.
Yeah.
This is starting to lose some steam, but not the stows. So that's why I keep on saying, one of the reasons I keep on saying, and my other reasons, which I'm going to talk about more in the Sunday session, why I think the market will start to lose steam after somewhere close to the middle of July. it's going to start to lose steam. And we're going to get a nice correction, which we are due for, in my opinion, and which we will take full advantage of. But those corrections and pullbacks are going to be very fast. They are not going to last weeks and weeks. I'm letting you guys know that. So whatever we short, we can't be like putting too much in there and going to bed and waking up the next morning with the market up 500 points. It's happened to me years ago, and it's not a good feeling. Like I've had like 20 puts on the S&P 500 at like, $3-4, and next morning I wake up, I've lost thousands of dollars because the market's opened up way higher. So bottom line is, as we get closer to the zone here in the 3015, 3020 level, we should, at that point, we are moving very fast and furious. At that point, get a nice, 400 point type of move. Now, whether or not that becomes there, because these are very strong. You see these lines, how they're moving? This is this crossover of the 3450. I mean, there's some powerful stuff going on here. Now, the further we move away from the moving averages, this red line, by the way, is the mid Bollinger. You both know what it is, right? Here's your Bollinger Band. Here's your mid Bollinger Band. So this red line here is not a moving average. It's a mid Bollinger Band, this one. Got it?
Yeah.
Now,
Yeah.
here's your neckline. Your neckline's at 29.64. That's what I expected to be retested on Friday, but it came close to it, but it didn't, like we saw right there. It created a hammer. It's still a red hammer, but it created a hammer. So the key is that this retest is inevitable. We almost got there on Friday. You can easily retest this major daily breakout. See this? Which is 29. This was all-time high just 2 weeks ago, 29.65, 29.64. See that? And that breakout, this retest that is inevitable, we almost did it on Friday, like I keep repeating, is going to tell us whether or not we got the juice to make another new high, or whether the market's going to fall and retest the moving averages. Remember, the rising moving averages. But this is obviously a large, that's almost a 70-point drop. You're talking 500 points on the Dow. You could get that. Just letting you know. By that time, we will have the other signals that you guys will be watching as I keep on putting these charts, and you'll be looking at them on your own. Very easy to do that. In fact, the great thing about investing.com is it is designed for mobile applications. So you can put the same charts very quickly with a quick MACD, Bollinger, and stuff like that on your iPhone or tablet, and it looks fantastic. It is totally designed for mobile applications. All right, just keep that in mind. Very easy to see on the eye. So if you start to see this starting to do this, guys, just ease back, because that means the pullback's coming. It's going to be fast. You can always put some SPY puts out there, and then keep an eye on my charts that I put across. All right, so this is good. So we're good with the chart part. Any quick questions on this? No? Yes? Okay, sounds good. Now let's move into some stocks here. This Roku is a beast. Okay, I missed Roku this week. I didn't miss it last week. I missed it this week. This chart is really powerful. This is a swing trade. Regardless of what happens intraday, as far as I can tell, and maybe I think you both will agree with me, this is something we want to buy some calls into July 19th and August. Maybe September. I don't know. Because look what happened here on Roku. This was April. These are true swing trades, just letting you know, at least technically speaking, from this vantage point. So look what happened here in December. Major crossover on the stochastics, right? Stock at that point was in the 30s. It went into the 40s, moved into a base for days and days, then broke out. Look at what's happening here. This was April. Stock was in the 60s. Bang. Earnings. That was earnings. We played that. Took it all the way up there. Kept moving nicely sideways. And Mike, you notice how the stows come down towards that 60, 70 level and then turn up?
Yes.
Right? Exactly. So that's exactly what it did. This was your big move up on that earnings. Then the stock kind of moved sideways. Not up every day, but up. Then it pulled back, up. Then you get the sharp pullback in the month of June. Everything goes down and becomes a bargain basement price again on Roku. All right? Just look at patterns, guys. Look at this. Look at this. So let's look at this. All right? When it hit rock bottom here, 1 second. When it hit rock bottom here and started to cross over, just the way it just started to cross over here, right? Right there. It crossed over on the 3rd. On the 3rd, the crossover. This crossover happened on, please give me the date. Look at the bottom, both of you.
4/18.
Thank, April 18th. Look at the price on the right.
60.
No, 55.30. In fact, you can always look at it up here. Look at the price on the top. It says 418. You see this thing here? Watch. So it's 418, always open. Do you both see what I'm seeing? Mike,
Yes.
read it to me so you know how to read this thing or
Oh,
something.
it says 05584.
So always opening tick. High for the day was 57.34. L is low, 55.02. C is closing price, 56.68. Get it?
Got it.
Okay. So bottom line is, it gives you simple moving average, blah blah blah. Forget all that stuff. MACD histogram, a negative to positive crossover. So on that day that it happened, the stock was basically closed at what?
5668.
Let's call it 57. Fair enough? So I'm going
Yeah.
to write it down. On the crossover day here, the stock closed at 57. By the time it hit super overbought, the stock had gone up just slightly to 65. See that? 66, right?
Yes.
Okay, so I'm going to put 66 here. There. Now, let's do the same math. Simple stuff. It actually went, or it was right before earnings. In fact, by the time it hit that next high, the stock was at 90. See you later. Okay, now, crossover here. Please look on the top here and tell me what the closing price is on this on the 3rd.
93.
93, right? So from
Yes.
here to here, we got 9 points on this minor move, right?
Yes.
Yeah.
Exactly. So by the time, technically speaking, we get super overbought again, which it is going to do because that's exactly what it's showing. In between, there's going to be a little, a few bumps here and there, but it's going to get overbought. Whether it be 2 weeks or 1 week, or I don't know, because Roku moves fast. It's a very heavily shorted stock, so it moves fast. This was 9 points. You add 93 on the crossover here. What's 93 plus 9?
102.
102.
So the stock is going to go here. See what I'm talking about? The stock is going to go here. In my opinion, the way these charts are drawn, here's a large acceleration channel right there. This one is 109. Low end is 84, just in case, something really bad happens. The upper end of the big acceleration channel that started from January of this year, is 116. So from a swing perspective, regardless of minor little red days here and there, the stock is at 90. It's at 93. It closed at 98. We got 4 points on it on the short-term basis, probably by this week. And then I believe it can make an overshoot to the 110 range. So this is a great swing trade. Just passing it on to you guys. So even if it has a red day and it this was a minor red day along the way up, it had 2 red days. You want to be basically at that point, not panic selling, but adding a little bit to it, and you have to buy time. So July 19th and the August calls are great to go. Fair enough? So this is a great swing trade and this is the high momentum stock. And if you and just looking at the way it's traveling within this channel, I see no reason why it can't get to the 115 range or so. All right? You both with me so far?
Yes.
Okay.
Yeah. Yes.
Okay. Now let's take a look at Netflix. Netflix is about to do something big. I mean, really big. All right? Maybe that's a new show on Netflix going something big. Just kidding. All right. Or strangely big. Isn't that their a big show called Stranger Things? I've never watched that show. What is that show? About weird kids? Yeah, something like that, right, Mike?
I have no idea.
Yeah, it's one of their biggest shows. Stranger Things, it's called Stranger Things.
No,
And
no idea.
it's a huge. I mean, they get like billion plus frigging viewers on that. I mean, there are these guys from like some out there in China or in Africa watching. They probably like, I mean, they probably don't even like get translation, and they love the show. I mean, I'm crazy. Anyway, I haven't seen it, so I'm not that stylish. But anyway, so Netflix is about to do something big, not just based on the internals. Both of you, please follow. And remember, this is a highly volatile stock. Market's down, Nasdaq's down, boom, it'll be down $7. But I'm talking about the general direction of the stock. All right. So this is definitely good. Very, very good. It's moving in a nice slanted fashion right there. It's not just doing this. Remember, these fast W's are great trading things but it also means that it's going to fall. Get it? So I like these type of curved moves like that on the stochastics. You both understand what I just said?
Yes.
Okay. Now, this is a really good swing trade in my opinion. Netflix has created a very large inverse head and shoulder cup and handle that you both understand very well by now. Lower end of the handle is $332, 330. See this?
Yes.
Upper end of the handle is 385. So we kind of trade the stock for 5, 6, 7 points. Like, okay, that's great. But the big move I'm talking about, it's 330. It's 330. 380, let's call it 380. 385 is a little bit higher than that. Okay, 380. It's actually 385. So 385. Look at the nice bullish green candles. That is pretty nice. So that's 50 points, gentlemen. 50-point range. It's been traveling in this 50-point range all year. That is a long handle, long base. What did I say to the beginning of the conversation? I mean, this seminar. The longer the base, the bigger the move. Now, is it at the bottom end of the base? No. Is it on the upper end of the base? Yes. This is certainly giving us a check mark, like good to go. We're going to look at the MACD in a second. So 50-point base here. The stock breaks out. It's literally in a couple of weeks, if not sooner, the stock will hit new highs. 400 is on the table on this base breakout within a day. But it has to break out of this base. And once it breaks out of this base, of course, it's going to come back and retest it, all that stuff. But what I'm saying is this breaks out. It's a 1-year long base, very large cup and handle. the stock at that point is going to be trading between 385, 390, and its highest level Netflix ever generated, which is 420. That's the bullish picture. The bearish picture, I don't see it because this is really a W pattern. Mike, you see that?
W bullish.
W bullish, exactly. So buying a few calls at Netflix a month or two out and not like scratching our heads like we always do, like every time the market's like down like 300 points and it's like down, we use that as an opportunity to buy into it. Always buy time on this. So a week out and stuff is fine. I would go into the monthlies in this case, so that we have time in our hand. Yes, they won't move as fast as the weekly ones, which would be up a gazillion points if the stock breaks out, but at least they'll give you a decent sum of money. Because the monthly calls move slower than the weekly calls. You both understand that part because the time value is less on the monthly calls. So the intrinsic value, it moves dollar to dollar. You understand?
Yes.
Yes.
Exactly. So this is it. So this is another one, a good one to go. Now this is the daily chart. Let's take a look at the weekly chart. Wow. This is again, same story. It's a cup and handle with an inverse head and shoulder. See that? Now I call this pattern a Texas bullhorn pattern. Ever seen those Texas bullhorns, in front of the Chevys and
Yeah. Yeah.
Cadillacs, right? Exactly. This is hey, that you're pretty good. I put you on Netflix too. So this is serious stuff. So this Texas bullhorn pattern wants to go to 420. So from a trading standpoint, just showed you two large examples, is that these type of patterns always resolve themselves. Now in between, yes, it might come down and retest, $10, $12 here and there. But this is what is exciting. Look at that. The weekly is on its way. And it's always very powerful when the percentage K line, which is the orange line, this starts to turn. And it is just about to turn. See? When this is pointing down, you generally get a pull down on the overall picture. When this starts to turn higher, you get these monster $100+ moves that happen in the month of December of that happened starting December 24th, the big rally on December 26th. So we have to monitor this on the weekly to see if it's starting to turn. And these are slow turners because it's a weekly chart. So what happens on a 1 hour, 2 hour basis is not going to do anything. Correct?
Yes.
Exactly. So guys, look, 1.5 hours almost done. This is two prime examples of stocks, high growth stocks that you can capitalize on. I'll show you one quick one, which has always been. Now this is a new one that we made some real money, good money on lottos, and now we're just sitting there. This stock went up 34% because one of the big Canadian venture capital guys, Vora Ventures, I think he's from Toronto, Serge. He's a big Silicon Valley guy, Vora, Indian gentleman, Canadian guy. So he put in big money. He's a big activist investor. Here is what I found exciting, and the calls are so cheap, right? Is the stock went up 34% and we caught a good portion of the move, even though I didn't catch 106 and I caught the 115, 117, and it just exploded. It didn't give anything back. Isn't that incredible? Normally you move like this, you give some back, right? So only thing it gave back was 131, 131.72 to like 123, but nothing I can see on the weekly candles. Do you?
No.
Right? And this is a mergers and acquisition play. He's looking to unlock the value of the company. I just read a Bloomberg article that they're valuing this company, and this is Howard Hughes, a huge real estate conglomerate. I kind of knew, but didn't really know exactly what they did. It's not an aircraft leasing company. That's how, Hughes Aircraft. So the thing is, they said that the nominal valuation for this company is 200. If we get 200, awesome. Forget it. So we want to stay long this one and keep a little bit of it rolling over every month till something happens. Got it? So this is
Yep.
extremely powerful. Look at the daily. Another. Daily is like super powerful. Look at daily. I'm shooting for 140, 150. This is what? This is a beautiful, this is unbelievably one of the best looking bull flags I've seen. After it goes up from 90 to 130. It was moving so fast. I didn't even, I mean, I got in around here, right? And I said, bye, bye. I mean, I wanted to get in here, but it was moving so fast, because CNBC broke the news and the company acknowledged that, yes, that Vora Ventures was in the company. So this is a very powerful chart. The same thing with OC. Now, these are totally different types of charts, mind you. This is another one, which also the calls just exploded higher. Owens Corning, another asset sales, mergers and acquisitions, breakup potential. Activist investor in there. The daily is a bull flag within a large channel, which is 62.5. On the low end is 50. I'm not even looking at the 50 because I'm not going to stay around there. If the stocks breaks below, let's say 54 and stuff, then things start to get worrisome. But right now, it's a bull flag. The internals are confirming that things are okay. They're good to go. This was a huge volume. This was very light volume sell-off. That means the people who bought didn't sell. Get it? See
Yep.
the number of volume bars? That's another quick way you can read. It wasn't like a huge volume candle like this and everyone got out, in which case I'd be out. Take a little loss and get out. So, but this is good. Upper end of the channel, 62. And if it really breaks a move, we are looking at 67. Very cheap calls, we know that. Another great swing trade. Another great swing trade. That's it, guys. All right, so I have to run. It's almost 12. I will see you guys hopefully on the Sunday webinar tomorrow at 8:30. Mike, I'll talk to you a little later this weekend. Everything is good. And thank you for attending. It was great.
Thank
Thank
you.
you.
Are
Yep,
we
and
still do Sunday?
what, the Sunday webinar? No, I'm doing this with you for the weekend. I'm doing the Sunday weekend webinar in the evening.
Oh, no, nothing tomorrow.
Nothing, yeah. Because tomorrow I have I have two other students, so I won't have time. Okay.
Okay.
Yeah.
Okay.
But this, you see, what we talked about today is a lot of information, a lot of good information. I
Yeah.
try to keep it simple and stuff. So let it absorb. Then we're going to talk about some actual external factors about the market and stuff on Sunday evening. So this will help you process everything well. All right.
Okay. Okay.
Thank you. Okay. God bless you all. Take care, Serge.
Okay.
Okay.
Bye bye.
Bye-bye.
Bye.